Sorry, not something I use. Something I did use when Bo was paying off his student loans. But if you're paying off your student loans, then you can deduct any interest you paid. You can also deduct any interest you paid on a mortgage, which is what I do every year. But I don't see anything on there that we need to worry about. But I'm not joking when I say when you're doing this stuff, you just Google stuff and look up anything you don't understand. All right, add lines 1Z, 2B, all this stuff. This is your total income. So it looks like we need to add 1Z and 2B together. So I'm gonna grab a calculator. Exactly. Good job. 50,000. 50,956 and 23 cents. Adjustments to income from Schedule 1, line 26. If I go back to Schedule 1, 26 is all the adjustments to income, so that's like all the non-taxable stuff that you could have, but we didn't have anything on there. Subtract line 10 from line 9. This is your adjusted gross income. Since there isn't anything, we're just going to repeat it, $50,956.23. Okay, then it says, what's your standard deduction? Or you can itemize your deduction. Itemized deductions, which I think are on here. Itemized deductions, this is especially used when your individual deductions is higher than the standard, what was it right now, 14,600? Often this is used when you have like a business and you're writing off a lot of expenses. This also could be used if you like own a charity, that kind of stuff. I've never used itemized deductions. I've tried a couple times, but my itemized deductions will never add up to greater than my standard deduction.
What are standard deductions like that you can deduct?
Well, the standard deduction is just one number, that 14,600.
Then what are the itemized? That's what I meant.
That's stuff that you spend on your business. That basically money that you put into a business that isn't like suppose you're a farmer and you made $100,000 last year, but then you put $55,000 of it into equipment and seed and whatever, which really these numbers should be inflated quite more than that. But
Oh,
yeah, if you're a farmer, you're not just making $100,000, you're making lots more than that, but you're also spending a lot of money too. And then that money that you're spending to keep your business going can at times be itemized. So, because you don't want it to look like if you're a farmer and you're bringing in $750,000, you're not super rich because you're spending that money. Like maybe you took out a short-term loan so that you could buy seed that year or so that you could use equipment that year, and then you're paying that off with the money that you brought in. So it's like a season-to-season kind of thing.
A lot of times they also go and buy, new stuff or
Right before,
right before tax.
so they can write it off. Which makes sense because it's something they're gonna have to buy anyway. It's not like they're cheating the system. They're just timing it right, which is good. Okay. Notice that it says over here exactly what the standard deduction is. It says if we're single or married, that it's 14,600 this year. What did you say it was for next year? 15,000 something, Talon?
I think it was just 15,
15 straight?
I think so.
Okay, so this was 12, so our standard deduction is 14,600. Remember, that is the amount of money that they believe you need to at least survive in the United States, which means that that is taken off your income before you get taxed.
15 flat.
15.5? Okay.
There's no 15 flat.
15 flat, okay. Qualified business income deduction from those forms. We don't have a business, so we're not gonna do that. So this is $14,600. And then we're gonna subtract line 14 from line 11. So I'm gonna take my $50,000, 956.23 that I made this year. I'm gonna subtract 14,600 because I don't get taxed on that. 36356.23. That's my taxable income. That's how much I'm actually gonna get taxed on. Even though I made 50,000, almost 51,000, I'm only gonna get taxed on about 36,000. Okay. Everybody good on this so far? Next, we need to figure out our tax. Okay, so this is definitely where you want to look at your 1040 instructions. We're gonna scroll down to the taxes, which is, that's earned income credit. Okay, starting on page 64. Do you remember that whole worksheet I gave you that was like, if your taxable income is at least but less than this? That's what this is. So it looks like on page 64, it starts at $1,000. Does that mean that they made $1,000 total that year?